huge strides which compliance is required, all the intermediaries to adopt, has made a big, big difference to this entire country. Today, our capital market is seen to be one of the most efficient capital markets in the world. And that has been the result of systems, processes, technology, and the necessary compliance regulations which every broker, every intermediary, today, every merchant banker, every register, everybody needed to do. Today, the quality of IPOs coming into the market is far, far superior than what obtained 15 years back. And that's been due to very stringent norms, which has been, the onus of which has been put on an investment banker. He cannot bring any Tom, Dick and Harry into the market today. If I am an investment banker, I pretty well see that the client whom I bring into the market has got A, credibility, B, track record, C, business plans, revenue streams. He can't go and say anything to the market and say that, look, this is, can't create any picture which is rosier than what is really obtained. A huge amount of documents needs to be filed, and there is heavy liability on the investment banker to miss out on even the smallest detail. So the quality of issues coming into the market, the kind of seamless way in which trades are executed in the secondary market is all a result, a combination of a whole host of issues, and compliance has been one of the pillars on which this has been achieved. KYC, as you all know, is very strictly implemented in the secondary market today. You can't open a trading account or a broking account. You can't open a depository account. You can't trade in mutual funds unless your KYC is fully done, unless you follow all the rules. So there is a heavy amount of transparency in the system today. And that's one of the key reasons why our market is attracting so much funds. Our market is, apart from the economic growth story, of course, and that's the primary thing, but apart from that, there is confidence in the trade, there is confidence in the system, there is confidence in the clearing mechanism, there is confidence in the settlement process. So, all of these were not there 15 years back. I am fortunate to have witnessed the capital market transition from a fully paper-driven market to an electronic one today. 25 years back, the story was very, very different. I don't want to go into the details there. But today, what we have obtained with the T+2 settlement, which has worked with clockwork precision over the last so many years, and there has been no case of default, even though we had some tremors on the January 18, 20th, 2008, when we had a heavy fall. But even that was survived. And all these are thanks to high disclosure limits, the margins, everything. I mean, this is a combination of all. What about listed companies? The client base with whom we work on a day in, day out basis. Today, being the compliance officer of listed company is a tough job. Because not only he has to safeguard the interests of the company for which he works, he has to safeguard the interests of the investors in his company, all the stakeholders, and he has to ensure that this tribe called the promoters and directors, who are, in a quote, least compliant oriented, has to be compliant. It's a tough task. Telling your boss, please don't do this.